income tax, PRSI and Universal Social Charge or USC calculator for this period, year to date and end of year 2024. Hi there, this is Padraig here from Payroll Matters in Ireland, and today I want to talk to you about the new super duper versatile multi-purpose income tax USC and PRSI calculator for the 2024 income tax year, which was developed at Boyle Payroll Project Management, Ireland's leading payroll outsource provider for small businesses. Well, you may ask, why in the month of March 2025 am I telling you about a 2024 tax year calculator? You may even be thinking that Padraig has lost the plot. I will leave you make up your mind about that one after you watch this step-by-step guide to the end. For the moment, all I can tell you is that initially I was just going to do this super duper calculator for the 2025 tax year, but when I was almost finished I thought that one of the powerful functions of this calculator is to reconcile your end of year tax and USC liability with what you paid for the year. And because it was the 2025 tax year I was dealing with then, you would have to wait over 9 months before you could benefit from this powerful and very useful functionality. So I backtracked and started work on the 2024 calculator with all the percentage USC and PRSI rates for 2024. Hence the delay in getting this calculator ready for you. The 2025 will be ready shortly after this one is released, so keep an eye out for it. Before I explain what exactly the super duper means, let me just say that this calculator and this step-by-step guide on how to use it and where to locate it, let me just say that it contains the answers to over 3/4 of the questions PAYE taxpayers ask in Ireland in relation to income tax, universal social charge and pay-related social insurance deductions, whether that be for this period, year to date, or the end of the year. So I am requesting you now that if you have started to watch this guide, to stick with it to the end, because there is no part that you can skip if you want to get a complete picture. Armed with the information in this video and with the calculator, you can wow your friends and work colleagues with your pay and statutory deductions knowledge. And you are welcome to download both to your homepage to make even a bigger impression with your workmates in the event they need help with calculating their income tax, USC or PRSI. So what does all that mean? It means that with this calculator you can 1. Check that the tax you are paying for this pay period, or the current period as some may call it, is correct. For the past number of years we had a separate calculator for this, and we referred to this as our net take-home pay calculator, which, may I add, was also developed at BPPM. This new super duper calculator will indicate that you are either A. balanced, you have the correct amount of income tax, universal social charge and pay-related social insurance paid. B. PRSI reconciliation is a simple matter of checking whether or not the PRSI figure matches the PRSI deducted from the specified period on your payslip. B. Underpaid, have paid less tax or USC than you should have paid. C. Overpaid, have paid more tax or USC than you should have paid. 2. This new super duper BPPM calculator can also check that your cumulative income tax and USC, or as some call it, year-to-date income tax and USC position is correct by using the same calculator, by inputting the cumulative figures from your payslip. In many cases where your this period tax or USC does not agree with the calculator and you do not have a balanced figure often means that a revised certificate has been implemented by your employer, and as a result some adjustments were made in respect of previous periods to your this period values on your payslip. In these cases, our year-to-date income tax in USC will tell you whether your cumulative or year-to-date position is balanced, underpaid or overpaid. If the result still remains unbalanced, then the likelihood is that the imbalance surrounds a taxable DSP payment like maternity benefit or illness benefit that you are receiving or have received. The process for balancing this requires a slightly different process, and we will return to this later when we are outlining the guidelines for using the year-to-date calculator. Would you believe that this same BPPM calculator can also be used in the same way as BPPM's previous end-of-year tax and USC calculator? Every year, hundreds of our members on the Facebook group Payroll Matters in Ireland ask about underpayments and overpayments of tax and monies either owed by them or owed to them by the revenue commissioners. The step-by-step guide as we go through a little later will show how the BPPM calculator will answer all the frequently asked questions on how underpayments or overpayments occur and how to verify the figures on your statement of liability. Regardless of which calculation function you are most interested in, you must go through the step-by-step guide in this first section, outlining the this period functionality of the calculator, which we are going to go through now. The reason for this is simply that we will not be repeating ourselves explaining what each cell or box means for the other functions of this calculator. 1. This pay period net take-home pay calculator. In brief, this calculator will determine the income tax, universal social charge USC, and pay-related social insurance PRSI that will be deducted from your gross and taxable pay based on the information you provide about your tax credits, standard rate cut-off point, your PRSI class, and whether or not you have a medical card. This calculation is a true reflection and will mirror what you see on your payslip. There are a few scenarios where the calculator will not operate the same as a live payroll system that has access to more information like previous week's earnings and deductions. For this reason, we have the cumulative or year-to-date calculator, as we have mentioned earlier, that will confirm if your tax and USC to date is balanced or otherwise on a cumulative basis. We will deal with this scenario in just a little while. This calculator is very useful for calculating how much tax a person pays normally and for calculating the extra or less tax PRSI and USC a person would pay, for example, if they were getting extra pay for overtime work, or getting promotion, or indeed reducing their hours, or going job sharing. For example, if you are reducing the number of hours you worked by half, then simply reduce the gross pay and the taxable pay from your last payslip by 50%. And the calculator will do the rest. All you have to do is compare the results. We will get to an example like this and go through it step by step in just a little while. For the moment, let us focus on a straightforward example like this one. When I say straightforward, I really mean less complicated, because as we all know, there is really nothing straightforward relating to payroll calculations. May I say from the outset that this payslip layout is excellent and gives the recipient sufficient information to enable them to work things out for themselves. The first thing about this payslip that I would like to point out is that I believe it is a HSE payslip, and I am chuffed to point out that I was involved in its design, albeit over 20 years ago, when I worked as a payroll project manager with the HSE. When we input the figures into our calculator, these are the results. I will go through this example and explain all the items such as balanced, etc. in just a moment. As with any calculator, it is important to know how to use it and what all the buttons, or in our case, the cells mean, and where to find the information that goes into them. All you have to know are the following easy to locate pieces of information. The first question in this calculator is pay frequency. The options are weekly, fortnightly, 4-weekly or monthly. These options cover most scenarios, and you will not find these range of options on any other calculator currently available. The next box is for your annual standard rate cutoff point, often referred to as SRCOP. Take the figure from your tax credit cert as seen here. Alternatively, if you know that the this period tax credit on your payslip as seen here matches the figure on your tax credit certificate, then use this figure and multiply it by 52 if you were paid weekly, by 26 for fortnightly, by 13 if 4-weekly, and 12 if paid monthly. If you have 2 employments, use the annual figure for the employment ID you are calculating and then repeat for the other employment. The next box is for your annual tax credit. Again, take the figure from your revenue tax credit cert as shown here. If you have 2 employments, use the annual figure for the employment ID you are calculating and then repeat for the other employment. Again, if you wish to take the figure from your payslip, then repeat the pay frequency multiplication process. The next box is for your tax basis. There is a drop-down menu to choose from. N is for normal or cumulative, E is for emergency, and W is for week 1 basis. If you need more details on these, see our video, and the link is here. The PAYE system for all pay-as-you-earn workers explained. The next box asks you for the pay period. Because for this exercise we are only interested in the this period calculations, the pay period must be set to 1. If the pay period is not set to 1, then the calculator will not give the correct result for this period values. That's very important. So no matter what the pay period you're dealing with is that's on your payslip, if you want to see your this period values, always set the pay period to 1. The next box asks you if you have a medical card. The reason for the medical card question is because medical card holders pay a reduced rate of universal social charge. You should see this on your tax credit certificate like you see here. There will only be a 0.5% and a 2% rate. On tax credit certs for those without a medical card, there is also a % and an 8% rate. If you are not on a reduced rate, be sure to notify Revenue that you have a medical card. We have a video here on our channel on how to notify Revenue that you have a medical card. Pop a comment underneath and we will give you more details if you cannot find it. The next box is for your PRSI class. The default here is A because this is the one most PAYE workers are on. It can be one of the others in the drop down which apply mostly for civil and public service workers. It will show you on the payslip. Don't be concerned if you see a 0, a 1 or any other number following it. All we are concerned about is the letter A, B or whatever. Gross pay. Gross pay this period. On this period you will find it here. This may also be called total pay, which would mean pay subject to USC and PRSI before any money is deducted, USC or PRSI. If you find it difficult to find any of these, please refer to our video guide here on how to read your payslip and this will help you find what we are asking you for. If on your payslip you have an item called PRSIable or USCable pay, then use that figure in the gross pay this period box on the calculator. If you do not have this item on your payslip, you can disregard the next few sentences. This is a calculator and does not have the same functionality as a payroll system, and rather than adding additional rows to cover a relatively small number of cases, we request that some users perform a little calculation before entering a figure here. The Finance Act of 2022 introduced Section 897C, which requires employers to report details of certain expenses or benefits made to employees and directors. Reporting the details of these expenses or benefits commenced on the 1st of January 2024. Information on payments employers need to report, like small benefit exemption, remote working allowance, travel and subsistence. If these payments are included with total or gross pay, they are not liable for USC or PRSI. So if you are in receipt of any of these for the period in question and you can see that they are included with the gross pay, then please subtract them from the total gross figure and enter the result in the calculator. Some payslips output more information for the employee than others, and I am happy to point out that this payslip takes account of what we pointed out earlier, and we can see here that the PRSIable figure has taken account of the travel expenses, and we can simply use this figure in the gross pay box. So total pay is the total amount a person is paid before any deductions are made, and includes wages, basic salary, notional pay, bonuses, premium payments as allowances, and any shift premium, overtime commission or bonuses, etc. The next box is for the taxable pay for the pay date you are looking at. Most payslips will tell you what the taxable pay is, like this example here. If you have this figure on your payslip, just enter it here and disregard the next few sentences. Taxable pay is your gross pay less any non-taxable deductions. Examples of non-taxable deductions are pensions and superannuation payments, PRSA or AVCs. On Revenue's website, taxable pay is defined as taxable pay is your gross pay less any contributions you make to a revenue-approved pension scheme, revenue-approved permanent health benefit, income continuance scheme, salary sacrifice arrangement, personal retirement savings account PRSA, retirement annuity contract or ASE. These amounts are deducted from your gross pay before your employer calculates your tax. If there is no taxable pay section included on your payslip, then deduct any of these if you have them from the gross and enter the answer in the taxable pay box. If you happen to have any of these, the calculator may give a difference of a couple of euro from your payslip, as pensions, deductions, etc. are a complex area in the calculation of universal social charge. For the this period functionality, you will see that the value in the next two boxes must be 0. The next two boxes is where you enter the amount of tax and USC paid in this period. The next two boxes show whether or not your tax and USC is balanced or not. The last box will tell you how much PRSI you should have paid in this period, and you can check this figure against the amount you actually paid on your payslip. The PRSI rates increased in October 2024, so you can only reconcile this figure for a payslip dated after October 2024. If you are looking at an actual payslip before October, there will be a small difference between the two results relating to the PRSI figure. Please note that net take-home pay in this calculator means taxable pay, less income tax, less PRSI, and less USC. The this period tax, USC, and PRSI functionality of this calculator was created mainly for calculating weekly, fortnightly, 4-weekly, or monthly gross to net payments for checking against your payslip, an example of which we will go through shortly. It can, however, be also used very effectively and produce accurate results for different scenarios. Like, for instance, if you wished to compare net take-home pay for full-time work as compared to if you decided to job share or reduce your hours, or indeed vice versa, and is ideal for this purpose. We will look at an example of this after we go through the first example. When we input the figures from this payslip into our calculator, these are the results. The pay frequency is monthly, as we see here, pay from and pay to, which is a month. I don't expect anyone will have difficulty knowing how often they get paid, but in the event you have difficulty with finding any of the other items needed for the calculator, we have, as I mentioned earlier, a video called How to Read and Understand Your Payslip. Just while you are looking at the figures that I have entered and where I found them on this payslip, can I request that to keep up to date with Payroll Matters in Ireland, please hit the subscribe button. Subscribing will cost you absolutely nothing, but may help us at Payroll Matters in Ireland, the Facebook page and the Facebook group and YouTube channel, to continue to help PAYE workers with their questions on pay, PAYE, income tax returns, tax back, tax refunds or rebates, tax credits, and many more pay and work-related issues. Subscribing will help us to continue making helpful videos like this one on all types of payroll, PAYE issues and step-by-step revenue My Account guides. Please don't just skip over our request for you to subscribe to our channel. We do really need your help, and it costs you nothing. Okay, enough of that for now. It is not obligatory to subscribe in order to get all the help we provide to PAYE workers either on here or on our Facebook page or group. We have been doing all of this for free, regardless of whether you subscribe or not, and we will continue to do so. You will note that this is one of the better designed payslips with PRSI pay itemised. Pay for USC and pay for PRSI are almost always identical. Where there is a figure for PRSI-able or USC-able pay, then we use this figure on the gross pay box. For example, if PRSI-able pay was not shown separately and the item marked on the payslip as miles/KMS FT rate was included in the figure as gross pay, then we would have had to subtract the amount under miles/kilometers flat rate from the gross pay and enter the reduced amount in the gross pay box on the calculator, which is €1,704.75. When all the figures are entered, the calculator will indicate in these cells here whether your tax and USC is balanced, underpaid or overpaid, and give you the difference, if any, between the calculator and your payslip. Please note that where the difference is less than €10, the calculator will indicate balanced, but will still give you the amount of the difference. In this example, the likelihood is that this person is on reduced hours, and for the current month, this person has not earned enough to be liable for PRSI. Let us assume that this person is working half the number of hours of their full-time equivalent or job sharing with a basic pay of €1,400.15 per month. Now, let us assume that this person doubled their basic hours from the first of the next month, and now their basic pay is €1,400.15 multiplied by 2, which is equal to €2,800.30. And let us assume for this example that their unsocial hours and all other payments remain the same, and we will simply increase the gross pay and the taxable pay figure by €1,400.15 and note the difference in the balances and the PRSI. Now the gross pay and taxable pay this period are €3,104.90 and €3,040.29 respectively. We leave the tax paid and USC paid as were on the previous payslip, and we see here that this person would pay an additional €378.78 in tax, an additional €47.16 in USC and pay €127.30 more in PRSI from the previous amount of zero. When people ask me if it is worth it or not to work extra hours or go from part-time to full-time, I generally have the same answer. It's up to each person to decide for themselves, because when the question involves working extra hours, you are talking about a trade-off between work and whatever it is you would be doing if you were not working. However, in the case, for instance, like a promotion with extra money where there are no extra hours to be worked, I would always recommend that strictly from a financial perspective to go for it. You can see from this how versatile and useful this calculator can be. For example, if I was to work overtime and would be getting €250 a week more, how much would this be worth into my hand? The questions the calculator can answer are endless, so be sure to share it with your colleagues. The second function of this calculator, 2. Cumulative income tax and universal social charge calculator, or year-to-date income tax and USC calculator. Calculating your year-to-date income tax and USC from the following pieces of information on your payslip. Unfortunately, we do not have any standards for representing these pieces of information, and they can be shown differently on different payslips. The things to look out for on your payslip to calculate your year-to-date tax and USC are: 1. Pay frequency. On this payslip, you will find it here. 2. Annual 20% standard rate tax cutoff. This is the figure to take from your tax credit cert. 3. Annual tax credit. This is the figure to take from your tax credit cert A-B. If there are no deductions, then you will be taking this figure as shown here. 4. Tax basis. The tax basis or tax code N for normal or cumulative may also be represented as cumulative. E for emergency and week 1 or WK1 for week 1 basis. On this payslip, you will find it here. 5. The pay period in question on your payslip. This may be referred to as tax period on some payslips. They will be 1 to 12 for monthly, 1 to 27 for fortnightly, 1 to 53 for weekly, and 1 to 14 for 4 weekly. The 53, 27 and 14 are when there is a week 53 in the year. On this payslip, you will find it here. 6. Whether or not you have a medical card. This information you have yourself, and whether you are on a reduced rate of USC. If you are unsure, then check your tax credit cert. If you have a medical card and have not notified revenue, then check out our video on how to do this. You will find it by scrolling down on the videos on our channel in Payroll Matters in Ireland. 7. PRSI class. On this payslip, you would find it here. All you need is the first letter. 8. Gross pay to date or cumulative gross. On this payslip, you will find it here. As we outlined for the calculator in section 1, if your payslip has a cumulative figure for PRSI-able or USC-able pay, then enter the figure here in the total gross pay to date box. Taxable pay to date or cumulative taxable pay. On this payslip, you will find it here. 10. Taxable DSP payments to date. This box only applies when you receive some temporary or short-term disability benefits like maternity benefit or illness benefit, and does not include the likes of pensions like OAP or widow's pension, unless, of course, if you are not in receipt of any of these pensions from the beginning of the year. So, to emphasize, if the only DSP payments you are receiving is the old age pension or widow's pension or any other payment that you will be receiving from the DSP for the whole year, then you can leave this box at 0. The only time you have to enter a figure in this box is when you have commenced receiving the payment for the first time after the 1st of January. What has to be done is to add the sum total of any of these payments to date and enter them here. So, for instance, if you received 3 weeks payment of maternity benefit up to the date of the payslip, you are checking, then enter the figure in this box. 11. Other taxable income to date. This box applies mostly for end of year calculations for anyone with additional income which is under the limit to bring them into a chargeable persons bracket as per revenue categories, and who wishes to know what tax they may be liable for at a given point during the year. Then they can enter the figure for their other additional income to date in this box. Complete all these pieces of information and the calculator will give you the tax and USC figure to date, which may or may not match the figure on your payslip. The USC figure may not be equal to your payslip if you have legally enforceable maintenance payments payable under legal obligation, or a salary sacrifice under cycle to work scheme, or any other items not liable for USC, which are very rare and which you have not deducted from the gross pay figure. Again, if you happen to have an item on your payslip called PRSI or USCable pay, then these items will already have been reduced in this figure. And as we said, you can use the PRSI-able or the USCable figure in the gross pay field without having to do any other deductions. If you do not have any DSP social welfare payments or other taxable payments, then the calculator should show you that you are in a balanced position, like in this example. You can go through the items on this payslip to see where I got them from, and I simply added them in to the calculator. The top three figures I derived based on the pay date and the year-to-date figures from the SRCOP and tax credit. You can see that the tax and USC are balanced to the cent. The PRSI calculations on year-to-date calculator is not valid, as PRSI is not calculated on a cumulative basis. You will notice the changes in the description of the cells when you toggle between period 1 for this period and period 2 for the cumulative, and indeed when you choose week 1. The week 1 basis on a tax credit cert can be there for many reasons, but the most frequent is when a PAYE taxpayer receives a temporary DSP payment like maternity benefit or illness benefit. This brings us nicely on to the most reason for differences between the cumulative year-to-date calculator and the results on your payslip, which can result in an overpayment or an underpayment of income tax. The reason has to do with timing between the time you receive one of these temporary DSP payments, the time or the time lag between this and the timing of the DSP notification to revenue to adjust your tax credits and rate band on a week 1 or temporary basis, then the timing of the revenue payroll notification or RPN to the employer, and then the timing of the implementation of this revised tax credit certificate relative to your pay date by your employer. The same time lags come into play when you return to work following illness or maternity leave, for example. So when people talk about real time, they need to know what they're talking about, because there can often be between 2 or 3 weeks for the process to wash out through the various systems. The bottom line here is that if you are receiving a temporary DSP payment, the likelihood is that you will have either underpaid or overpaid tax if you continue to be paid by your employer during illness or maternity benefit. This underpayment will remain on your record until such time as you are issued with a revised cert on a cumulative basis, like N for normal on your payslip basis, following your return to work. If this does not happen, then this underpayment or overpayment will be resolved when you complete your income tax return at the end of the year. This situation brings us nicely on to the third and very powerful function of this calculator. Our end of year tax and USC calculator can be used to reconcile against your statement of liability. Every year, hundreds of members ask about underpayments and overpayments of tax, and money is either owed by them or owed to them by the Revenue Commissioners. This step-by-step guide for using our calculator will put you in the position whereby you can answer all the frequently asked questions on how underpayments and overpayments occur. The figures you must use for your annual standard rate band and standard rate cutoff point SRCOP, as it is sometimes referred to, and your annual tax credits are the same as in the other calculators, except for a few little exceptions. And the first one has to do when you see a week 53 on your very last payslip, when your last pay date is due to be on the 31st of December or the 30th of December in a leap year. You may actually receive the money before Christmas as a double week. This will happen if your employer pays a double week for Christmas. Week 52 and 53. Please note that if you are a weekly paid, this situation only arises when your second last official pay date of the year is on the 24th of December or the 23rd of December in a leap year, regardless of when you receive the payment, or whether you receive a double payment before Christmas, or indeed whether you receive a normal 1 week's pay before Christmas and then your last payment on the 31st of December or on the 30th of December in a leap year. If you were fortnightly paid or 4 weekly paid and your last pay date is the 31st of December or the 30th of December in a leap year, then this scenario also applies to you. What you enter into the period in these cases is 53 for weekly paid, 27 for fortnightly paid, or period 14 for 4 weekly paid. You may probably be thinking TMI, or too much information. So do not worry too much if it's a bit heavy. You don't have to be concerned about these details, as the calculator takes all of this into account. I have a video here which makes the scenario more interesting. It is called Why You Are Better Off Being Paid by the Week rather than by the month. The end of the year option is excellent for comparing against your payslip to see if you are due a refund or whether you owe revenue for tax or USC at the end of the year. To get an accurate end of the year result, you must include all taxable social welfare benefits in the taxable DSP payments to date box. As mentioned, the annual tax credit and annual standard rate cut-off figures are from your tax credit cert, the same as for the other calculations. Let us work through an example to demonstrate the process of using the functionality of the calculator for this purpose. All the boxes are completed in the exact same way as the year-to-date section, with just 3 exceptions. 1. If, for example, your last weekly payment from your employer was in November, or we'll say tax period 47, you take all cumulative figures as we did for the year-to-date calculation. If you happened to get a tax refund directly from revenue in 2024 because of a period of unemployment, then subtract this figure from the tax paid to date payslip figure, and then you enter the tax paid as this reduced figure. The second exception, again for this scenario of this payslip being your last of the year, but not issued towards the end of December, you enter pay period 52, regardless of the pay period shown on your payslip, which in this example was 47. 3. With the cumulative year-to-date calculations, we only entered the temporary DSP payments like illness and maternity benefit, and did not include the likes of the old age pension or any other pensions or payments that you were receiving for the full year. For the purposes of this end-of-year calculator, you enter all taxable DSP payments that you received within the 2024 tax year, if you know them. If you do not know them, then to find the total taxable payments you received from the Department of Social Protection, the DSP, in 2024, you can follow these steps. A. You can contact the Department of Social Protection directly. They can provide you with a statement of your taxable payments. B. You will be able to get a report of this from your MyGov ID. You can see here on this picture how you can request this statement. C. This last one is a bit of a cheat for the exercise we are doing, and there will be a waiting period until your revenue account is updated. Check your revenue account. Log into your Revenue Online Services account. The DSP provides information on taxable payments directly to revenue, so you should be able to see the total amount there. If you don't know your total taxable social welfare payments, then your preliminary end-of-year statement will tell you here under Income when you are completing your income tax return and looking at your employment detail summary. Let us take a straightforward example of a PAYE taxpayer. This person is paid weekly with an annual standard rate cut-off point of €42,000, annual tax credits of €4,872.50, a tax basis of N, a pay period of 52, no medical card, and pays a PRSI at the A rate. Total gross pay or PRSI bill pay or USC bill pay is shown on payslip is €49,592.87. The cumulative or year-to-date taxable pay is €46,067.84. The tax paid to date is €5,154.64. And USC paid is €1,288.33. This is a straightforward example in that there is no DSP payments or other income. As we can see here, when we enter the figures into the calculator, that this person's tax is in a balanced position. Their statement of liability should confirm that their tax and USC are balanced, unless of course revenue are recouping or refunding a tax imbalance from a previous year, or they are recouping a local property outstanding tax charge. If this is the case, it will be specifically itemized on the statement of liability. In the case that you are in a balanced position, then any further claims for medical expenses, etc., will be refunded to you. The calculator is not designed to include these. You would probably have concluded that this is a very powerful tool for whichever of the three functions you are using it for. For the end of the year function, once you have all the information available, you can find out whether or not you are in a balanced position, tax and USC wise. You don't have to wait for revenue to issue you a preliminary end of year statement to determine whether your income tax and USC affairs are balanced or not. Your next step is to complete the actual calculator, which you will find on bppm.ie website, which stands for Boyle Payroll Project Management and is Ireland's leading payroll processing provider for small businesses. BPPM has recently commenced processing or completing income tax returns, claiming tax credits, etc. for anyone that wishes to have someone complete them on their behalf. We, the Payroll Matters in Ireland, continue to encourage PAYE workers to look after their own tax affairs and have many helpful guides to assist them. We are aware that some taxpayers still wish to pay someone to do it for them, so feel free to pop me an email to info@bppm for details. You will find this calculator by going to our website, Boyle Payroll Project Management bppm.ie, and click on the Payroll Resources tab and scroll down to the 2024 Income Tax, USC and PRSI calculator. Good luck with it. If you have any questions, you can ask them in the comments or on the Facebook group Payroll Matters in Ireland. See you next time.